Hello, how's it going? And welcome back to mentfx. So on this beautiful day, we've had gold begin quite an insane move. We had a few members. I'm just going to go over this very quickly so I can then show you it live and then walk you through an actual system you can use. But 10-hour day on gold for this guy on a 1-minute chart. Buyong here looking for an entry on gold. Good for him. Let me just go up a little bit here. Someone on oil, don't really care about that. Here's another gold trade that I personally just sent out, but this is one of the ones we're going to be breaking down today. Just going through this, we got Gengar, a funded member on the gold train as well. I mean, in this case, it's because gold is the only thing delivering very well right now. Another one on gold on the 1-minute. This guy's on GP CAD. Another gold trade on the 15-second, right? So again, a lot of lower time frames. Of course, when you're in any community, when you're being taught anywhere, whatever it might be, the people that you're oftentimes going to see a lot of trades from are, of course, going to be the ones on lower time frames because lower time frames tend to have more setups, right? We've spoken about this let me actually do this. We've spoken about this in the last few videos where we worked through the advantages or disadvantages of dealing with trading a much lower or a higher time frame, and a lot of them involved, as you guys remember, the fact that as you go lower, of course, you open yourself up to potentially more opportunity for more money to be made quicker and all that stuff that comes along with that, right? So again, we kind of went over that and we went into a deeper set within the portal in the mentorship. However, you got a good whiff of that. And again, just back to back, many people trading the gold, looking at that. So today, I want to give you a kind of step-by-step plan that you could have followed yourself to also trade this play on gold, to start looking for these same kind of trades, and going forward, to look at a number of assets so you can actually start catching these actual trends. So here we have gold. What I'm going to do is I'm just going to move us back to the beginning of the week. So Sunday opened up around here, it looks like. So we're just going to simply go back here. We're going to get rid of all the analysis that was done on this. What I'm going to do is I'm just going to jump in here and delete everything just so it's not in the way. Just like that. Easy. I'm actually going to just throw it all into a folder and just call it use it later, right? Because I'm actually looking at this. So let's go over what actually inspired this move right here. So one of the starting points of anything that we do is we create a filter for actually trading something, right? For whether something is worth looking at or not. Now, there are many ways to make a filter. One of those is just to use your eyes, right? Because again, I don't want anyone to think that I'm here to necessarily sell them something. And well, it's better that you guys actually get profitable and then I can sell you, because at that point, well, it becomes a commission, right? Nonetheless, there is a free sentiment viewer on my website. If you click on this thing right here, which you can find in the description, I have a number of pairs here, which I'll add more to, but if we just simply look up gold, right, it continues to show the exact same thing that I've taught you guys over and over and over again on this channel to look for. You have daily institutional sentiment on a 50% or higher or 60% or higher. So on average, you understand that in the coming weeks or in the coming months, given that a bullish delivery starts to deliver, you will see good opportunity to the long side, because on average, when a trend is in motion, it tends to remain in motion. And at the same time, we do have the intraday confirmation as well that it's bullish. And for a lot of you private members within the screener, if we jump in here, which will also include the sentiment, but at a higher level soon, because we're working on a few big things. Gold, on average, has continued to also show a general bullish proclivity. So we've had a lot of members continue watching this thing. Now, in today's example, what I want to introduce to you is an EVC where the entry is a 5-minute. Now, this might be the first time you're hearing of this, so don't worry about it too much. It's very, very simple. EVC is simply a blueprint for timeframes, to understanding what timeframes you should be looking at, to understand how are the orders actually coming into the market, to give you a gauge of whether it's worth to watch the market or not worth to watch the market at all. And going by the portal material, which by the way, again, as I love to say it over and over again, all this material from step by step, from the very beginning to my entire understanding, is available in the members portal within the mentorship. However, at the same time, when I put out videos like this, I'm more than happy to show you main thoughts, main ideas, because again, it's about improving you. The only reason that it's behind a paywall, whatever, is because there's an actual step by step. And I like working with people and I like teaching people, and it makes me happy, okay? So there we go. So the best approach to timeframes is what you know as the EVC. And very simply, when you decide on your entry timeframe, which in our case today we'll be using a 5-minute as an entry timeframe, you can simply apply this blueprint for understanding timeframes. You multiply the E by 6 to get your validation, and your V by 10 to get the context. And on average, this creates a very good blueprint for understanding if something is worth trading or not. So in our scenario today, if my EVC or my E is a 5-minute, my V as a 6x multiple of that is going to be around 30 minutes, and then my C, which is a 10x multiple of that, is going to be about 300 minutes, which puts us at around 5 hours, which is what you see me on right here. So what you see on my chart right now is me on a 5-hour chart. You see the mentfx structure premium indicator applied to this actual chart right here with the models on at the bottom right, just showing us that we're either in accumulation, distribution, reaccumulation, redistribution, and 3 main simple moving averages, okay? One's a 10, one's a 20, and one's a 50. This is really all you need. You could even, some of you, have it even simpler and just turn off the 10 and simply have a 20 and 50. And again, if you don't have access to this or you're not a paid member of the team, simply go to indicators, add the mentfx structure, which is completely free and available, and again, is the exact ranges that I'm personally using to calculate the overall models. And again, the way you do this, if you've seen my other videos, is simply when price is moving higher and then breaks down, kind of like this right here. When it's moving higher and breaks down, that is known as a reaccumulation. If it's moving back and forth and then breaking long, that's an accumulation, which is why you see on the bottom right here that the overall price is an accumulation. It's simply using these understandings to pinpoint where are we generally in the market and how are the orders that are entering this market framing an accumulation, a distribution, or whatever it might be. That's all that's happening. So you can do that, you can add a free version of that, and then you can also go in and just add simple moving averages. So moving average simple, you press it once, then twice. You can go in here and make a 10, make a 20 on this one, and then you'll have a general look that looks like this. And you can change your colors to make it look all good, but this is my general chart setup for this kind of trading. So for our EVC, 5-minute, 30-minute, 5-hour, the main thing we want to start with is understanding what markets can we trade, right? And the first step of doing that, as you just saw a second ago, is having some kind of tool that filters the general universe, the general space of markets, right? And shows you things that are worth trading, whether that be Forex, stocks, futures, whatever it might be. This is the starting point, whether it be using a paid tool like this, whether it be doing it manually yourself, whether it be doing the sentiment viewer. Overall, whatever tool you use, you can see just based on the stuff that I've made available, especially for free, this is showing overall bullishness, which means that on average, as I show up to any given week, any given day, any given month, I'm on average looking for bullishness to continue delivering. And funny enough, as this thing has retained a 60% plus rating, over the last few months, which I'm sure a lot of you have noticed since around November of 2023, here's February of 2024, since these points, this thing has continued to make beautiful moves and there is no end in sight. At the moment, the only thing that I can do and personally expect is in the coming months, I'm looking for this thing to continue reaching into all-time highs. Now, in the event that it reaches and continues reaching up and higher, those are going to be opportunities for traders that understand how to follow trends. In the event that it doesn't do that and instead starts to fall down and reach below these moving averages, it simply becomes a market that is not worth looking at and that we simply walk away from. This is the concept known as what I like to call a, where can I find this? This is the concept that I like to call a worthless market. Okay, so here we go. So this is a concept that's very important, near and dear to me, and it's that if a move is not sustaining the moves that you're looking for, you simply don't have to touch it. A lot of traders think they need to be trading things. A lot of traders think they need to keep getting involved, keep looking for entries, keep forcing things. It's not true. The reality is if an overall market condition or bias is failing, that market simply becomes what I like to refer to as a worthless market. And in the event that a market is worthless, we simply walk away from it. So what's beautiful is that when you look at things that are showing overall proclivity to move into a certain direction, and then you trade them with that direction in mind, you stand to gain a lot when you're correct, and when you're hopefully correct, which is what we're expecting right now. Again, this is not bullshit. This is not some kind of hindsight nonsense. It's just simply understanding that we've been bullish. I've shown up to this channel month after month, showing you firsthand what I would do and assuming that this market is bullish. Okay, so you have tools that help you do that, and then you trade with it. And as it fails, if it does fail, you simply learn to walk away from it because you start understanding that you're not here to trade markets. You're not here to trade patterns. You're here to trade markets or assets or contexts. You're not here to be a gold trader. You're here to be a trader of the thing that's having money come in behind it, because that's what trends actually are. So, nonetheless, let's start. The main part of starting, or the best way to start, is usually to look at your entry time frame or your validation time frame on any given day. On average, when your entry time frame looks good, your validation is going to tell you whether it makes sense to keep trading it or not trade it. Or not, right? Very, very simply, like it's a way to confirm. So you can also start with the validation time frame, like the 30-minute in this case, and you can use that to determine whether it makes sense to trade something or not. What I'm going to do is I'm going to quickly copy this over, E5, V30, C5 hour, just so it stays locked onto the actual chart, just like this. So you can actually all see it right there on the right under this actually, just so it's very, very easy. So as I go to the 30-minute, right, the main things that I'm looking for on average is that price is delivering in some kind of stage 1 and stage 2, where price moves sideways, moves higher, moves sideways, moves higher, moves sideways, moves higher, kind of along the lines of this. Now, again, it doesn't have to be perfect. I teach a lot about this in the mentorship, but you guys can pause and read this if you want. The point of prices or understanding of stages is that they're not going to be necessarily perfect, but they are a condensed version of what actually is happening. So as we look at this right here, okay, what I'm seeing almost instantly, this is like the start of the week, right? This is Friday. So let's go to Sunday. So here we go. This was Sunday. So this was, I think, yesterday at open. Let's look at the time, right? So yesterday at open, we were around here. And again, as you can see, price right now, it's a little bit choppy, right? It's made a large move up. It's made a large gain. It kind of gave up a lot of that gain, came down very, very heavily. And since then, while it's been choppy and bearish, it has been choppy and bearish. All of a sudden, near the end of the week last week, it picked up and began to put in bullish action, right? Some beautiful bullish action, a beautiful bullish leg right here. It started going sideways. So overall, what it's doing is it's building this starter of a stage 1 that moves into a stage 2, a stage 1 that moves into a stage 2, a stage 1 that hopefully, based on what we have delivering here, in anticipation of a stage 2, and then hopefully the continuation of that, because on average, prices that are going to trend, especially when we have tools to help us find trending markets, are going to deliver through stage 1s and stage 2s, as you see in this image right here. Okay, so the general expectation is to continue delivering on this. Now, one thing that you can do for your validation time frame is you can focus on these same 3 moving averages. On average, you're going to see a market that is delivering or is trending. You're going to see it remain and keep its stage 1s and 2s, clear stage 1s and 2s, kind of above the 10, 20, and 50. In this case, you can see we're just above the 50. We're moving higher. So the overall expectation, and again, notice how I'm not drawing these perfectly because there is no perfection. You're not sitting there going, the perfect line, and there I will be a buyer. No, instead, it's a generalization of what price is doing. And sometimes what you can do, and what I actually do, is you can almost pinpoint where the orders are trapped under. So if you kind of just draw a line, I'll make this very red for you. If you draw a line, you can pinpoint where some of these orders are trapped under. So you know that on average, a lot of good trades are going to happen in or around these areas or a little bit higher as price begins to go. So you can do that because what it's doing, as I call it a supply line, what it's doing is it's showing you where a lot of the supply that's coming into the market is getting accumulated. And beyond that point, you of course have sky highs, and of course you look for this price to continue delivering through this stage 1 and 2 narrative, right? So the way you want to think about it is, of course, right, if you want to label it, you have 1 into 2, 1 into 2, and now you're having this 1 into hopefully a 2, right? And you can label that, right? If you really want to, you can 1, 2, 1, 2, 1, and then you're expecting this 2, right? So overall, the lineup of looking for bullishness is there, right? We haven't looked at entries yet. We don't know if there's an entry that's worth taking yet or not, but overall, the validation is in a move that is worth trading. So of course, I'm someone that wants to keep an eye on this thing because overall, every tool that we've used is proving that it wants to go bullish. Now, if I go to the 5-hour chart, which in this case is our context, the main thing that you want to see on average on this chart is you want to see that price is in some clear area on its own. So you don't really want to be trading when prices are stuck in mini ranges like this, right? It's much harder to trade those. But as price moves out of potential demand, something like along the lines of this, where it moves away from, here we go, where it moves away from some kind of area and moves through demand, and then begins to surf or sail across the 10, 20, or 50, once again, same thing, but usually over the 10 and 20. So mainly the things I'm looking at, if I zoom in on this price very closely, I'm mainly keeping an eye on this 10 right here and this 20 right here. So that's the two gray ones that you can see. And on average, all I want to see is that price is basically above them and hasn't made an exuberant, like crazy move skyrocketing higher. Because all this is doing now is it's building almost stairs to the move, right? So it has, you know, it breaks through this, it builds a stair higher, almost moves higher, and then it goes sideways. Then it moves higher, and then it goes sideways. And then hopefully it moves higher, and then it goes sideways, and then it moves higher, and it goes sideways. And this is how you anticipate the movement in prices, right? This is, again, a fractal version of simply, I'm going to show you it right here. This is simply a fractal version of stage 1s and 2s. Stage 1s and 2s, this is what's happening. And it's overall accumulations happening over and over and over again, okay? So with that in mind, the context time frame in this case is one that makes a lot of sense. It's not failing, it's moving higher, it's kind of at highs, it's moving in a new little area within which it exists. It's above the 10 and 20. So the validation and the context are very good. They both make sense. There's nothing that I am against on these. So the expectation is that we want to see price continue moving to the top side. So now as I move to the 5-minute, now I'm going to give you a few rules that you guys can use to make this a lot easier for yourself. So on average, in really good trends, keep an eye on this red and this gray line, which is the 20 and the 50. On average, what you're going to see, and again, please write this down, please take note on this, and then please go and test it. Because again, I don't sell any version of a signal or anything like that. Instead, I teach you to think for yourself and do this for yourself. So the best way that you can do this for yourself is to actually test it. And while I'm here, let me actually do this very quickly. If you go to mentfunding.com and click on competitions, you can, for completely free, we have one of these every single month, register for this, no money required, no nothing, and simply trade your system. Basically a system like this. Get involved when you can, trade that system, because you stand to gain. Let's go into the rules here. You stand to literally win free evaluations for absolutely nothing else, right? So it's very easy. Just sign up, make sure you're doing it. Even if you don't win, it doesn't really matter because you're gaining experience, and that's huge, absolutely huge. Now, what you're gonna see on average, okay, is that when there are trending markets for an entry-based time frame, what you're going to see is that prices are going to move higher from the 20 and 50. The 20 and 50 are going to kind of disperse a little bit. And then what's going to happen is price will pull back into the 20 or the 50. And what's going to happen is the 20 is going to undergo like a mini accumulation itself, where it'll go sideways a bit and then start moving higher. Now, again, this is not like this perfect RSI-based thing where you can just easily buy and sell when you see this happen. Instead, there's going to be a lot of experience to do with this, but on average, this is how prices move. And what's going to happen is it's going to create demand or blocks of demand or a high that you can actually get involved through and buy to hopefully get into the next move higher that's going to make, you know, a move higher. The 20 is going to start moving up, the 50 is going to start moving up, and then it'll collapse again. And those are going to be your profits. So instead of just talking about it, I'd rather just show you it, right? As we're here on the 5-minute, you can see that price is kind of choppy, right? If you kind of look at this 50 line, it's just chopping around, the 20 is chopping around. So this is, again, based on some of the previous videos I've uploaded, an area where you really don't need to be doing much. You have to just have the ability to have the market open and not touch it. Because the reality is I'm looking for more so a market condition like this, right? I want to find a market condition where, again, the 20 kind of starts going up, the 50 sloping up with it, price kind of pulls back into the 20 and gives you a setup. Now in this case, it might have not worked. That's perfectly fine, right? Then gives you a setup, And these are the moves that we're looking for. Because again, we're here for the trends. We're here for where the money's coming in behind the move. We're not here to just like hope that, you know, we can make some money in like random areas like this. Instead, we wait for the rules to be met. That's very simply what we do. So we're going to wait for an actual move to come out of this. And very simply, again, if you're a lower time frame trader, you need to recognize very quickly that the lower you go, the more time you have to spend on the charts. This is very, very normal. So you have to be there as this market is delivering because you should be watching, waiting for your opportunities to happen. Okay? So we're just looking for the 20 and 50 to start moving up because we know that we're looking for overall bullishness. And you can see kind of these little red lines that I drew earlier. These are all still part of that higher time frame stage one. Don't forget where you are, right? I know we're in that stage one on that higher time frame. If I go to the 30-minute, there we are, right? I know where we are. I know we're in the stage one somewhere, and I'm expecting this price to hopefully start to move higher because, well, it's in a bullish action, and the 5 hour is still clear. So all I'm doing is I'm waiting for the 5 minute to line up. Make sure everything's still being recorded. It is. I'm waiting for the 5 minute to line up and look to take the market, to continue trading the market higher. And at the moment, none of that's being met. So this is where patience is key, right? Now, we're starting to see the 20 kind of get above the 50 starting to slope up, and prices moving higher. This is almost the first time we're seeing money come into the market in a way that's kind of being accumulated while still being an overall accumulation, as per this thing right here. And now for some of the people in the mentorship, or even honestly, it doesn't really matter. The anticipation of the higher low rule, right? So as known as also an accumulation where, you know, you take out some kind of low, is of course already being met, right? You can kind of look at it and see it. It's being met through all this action. So this is overall accumulation, which is why you're also seeing this thing down here point towards accumulation. So the goal right now, right, is to allow the trend to hopefully begin and to give us an entry through, hopefully, some kind of move back into, let's say, a sideways moving 20, and then set up some kind of high that we can buy stop, right? And if that can happen, then great, we're gonna have an opportunity. So we're just gonna wait. Again, this is a move that just starts without us, it's perfectly fine. Starts to pull back into this 20 and the 50, which is exactly what we wanna see. And what we wanna see now, very simply, is for the 20 to almost like come sideways a little bit, for this to come and build up and maybe make a high that we can buy stop, because that's creating real demand. That's what demand actually looks like, right? So price just comes up, very hard to get into stuff like this, right? So as you get a lot better, there are ways to technically catch some of these trades right here where you get in through the high of a candle and you take it higher. Now, for me, and for what I'm trying to teach you today, this is not a move that is clear. This is not a move that's tradable. Instead, we have to allow the move to be created. And this is actually in line with what I've taught over and over and over on this channel, where you're looking for a move along the lines of something like this, where price moves higher, comes down, and then gives you a setup that you can buy like this, where basically it's proving that accumulation's coming in and giving you a pause to decide if it's worth trading or not. Now, this is one of those moments where, you know, we are in the beginning of a push, and some of you may actually want to take this. This is where a lot of experience can come in, where a trade like this may be considered by a number of you. Now, for me personally, I think this is too far above the 20 and 50 in this case, so I'm not going to take it. But I want to make sure that as you're watching this, you understand firsthand that there are opportunities that are available to you, that are available to the next person, to any unique individual, because the approach to markets is going to be unique. Anybody selling you a course or indicator where they're promising like that you're going to be able to mechanically trade everything is complete nonsense. You learn to mechanically trade your system, but your system is unique to you. So if this is a trade that you want to take, you can perfectly fine and finally take it. But right now what I'm trying to deliver to you is an idea where you let price kind of build up this accumulation and get into the accumulation like that. So, and then notice, you know, this wouldn't even given you an entry. Okay, well, maybe it would have. And then maybe it would have worked, right? It could have been a break even. Yeah, so in this case, you can see this entry here would have even become a break even or win, whatever you want to call it, right? I don't sit here and say, oh, you could have made money. Oh, you know, I definitely would have taken this, because I'm not here to bullshit you. There are trades that work. There are good trades that work. There are trades that run that I don't personally take. That's part of trading. The second you start realizing that, the less you start worrying about this FOMO and all these emotions that affect you, because the reality is there's going to be opportunities every single day. You just need to wait for them to actually deliver and to occur. So I'd wait. There's nothing for me to do. And right, this is a phenomenal trade for someone. For some people, this is like an entire year made. For some people, this is a month made. For some people, this is multiple RRs made, and that's perfectly fine. And there's nothing that I can do here for myself personally, so I wait, right? And I wait. And I wait for price to start coming sideways on this. As you can see, the 20 starts to go sideways. So right now, this is perfect. What I want to see is hopefully price come up, pause, and there should be a buy stop that we can take, right? So it comes up a little bit, maybe pauses now. Beautiful, right? So this is exactly the kind of action that I'm more than happy to trade. This is action that I'd be willing to enter. And one way to easily protect is to just protect, you know, an overall low completely. If you want to, you know, to take less RR out of the market, maybe a 1-to-1, a 1.5, 1-to-2. And some people are very happy with that. Some people are trading a $1 million, $2 million account with Ment funding, and they look for larger protection, maybe even larger protection, smaller RR multiples, and they're happy to take that. And some people want to get more out of the move potentially. So one thing that I've noticed and that I teach is that if you use the ATR, which is of course comes staple in the mentfx private structure indicator, but again, you can get it for free just right here, right? So you can add all that to your trading view as you see fit. You can take a multiple of usually anywhere from 0.5 if you want really high RR or good RR, up to 3x if you want low RR as your stop. Right, so in this case, you can see the ATR right now is 1.37. So on average, if your stop is 1.37 up to 4.11, which I think is really high, but 1.37 maybe times 2.74, right? So 2.74 is around here, 2.7. That I think is a viable stop to have, because on average, if the moves tend to move this much and then it moves double against what you're putting on, the likelihood is you're wrong about that move and you can wait till the next one. So this is a trade I'd be willing to take. So I'd have it set up right through this buy stop. Nothing wrong with that, right? So again, when I'm taking a trade like this, you're looking at it as a buy stop. You're not just taking it randomly. You're buying if it crosses through that high. That's where you're buy stopping the trade. So you're waiting and price fails down. And then simply the trade becomes canceled, right? So I'm actually going to take note of the trades that become canceled. So trades, number 1 got canceled, right? There was no trade at all. 1 is canceled. So now I'm waiting for the same thing. What I want to see is for price to come higher, right? Accumulate, make some kind of high that we can buy stop, and then take it higher. So we wait, comes up. Now we're waiting for a little pause if it can have one, right? So at this point, again, this is one of those moments where you are valid to trade through this high as is right now. Some people are going to want to wait, again, unique to the person, for this to make another candle, for it to make another pullback. Some people are going to be happy with this as a trade as is right now, okay? I think that this trade looks fine. However, just to make it very easy for everyone, I'm going to wait for some high to be put in, just like this one was, or just like this one was, sorry, this one right here, for a high to be put in that we buy stop. So I'll even wait. And now, good, okay, so we can take this. And again, same thing, I'm gonna look down here at 1.3, double it is about 2.6. So I'm simply gonna throw this around 2.6 and look at this as my trade, okay? And now again, we have the buy stop set up. The buy stop does not get tapped, but it still looks like a valid trade. And then it taps you in. And this is a perfectly valid trade, nothing wrong with this. And simply now, you want to follow management rules. Now, there are many ways to manage. I'm gonna cover a lot of these, as you all know, especially if you're part of the private, within the members portal as we continue getting better and better. But for today, and as a result of like a lot of the videos that we had, all we're gonna do is we're gonna sell 1/2 into crazy strength. That's it. And the other half, we're gonna trail with the let's call it the gray line right here. That's it. Super simple. So crazy strength, we take half off. Otherwise, nothing to do. And break even if it moves, let's say, hopefully what we want to see is either a crazy move higher, we'll move to, crazy move higher, we'll move to break even, or a move, pause, move, and we'll move to break even. Because again, because oftentimes when moves start going, right, they can put in a normal high or low to keep going higher. So that's what we'll do. So price is tapped in, nothing to do right now, nothing to do, nothing to do. Price kind of makes that pullback, nothing to do. And again, like if you got stopped out of this for whatever reason, this right here already becomes another very valid trade right through this high. So again, I'm not stopped out of this because again, I have normal management, good management, and our stop is at the moment kind of behind this candle right here. But this is another beautiful long, right? So again, I want you to remember that taking losses is not bad, because losses are kind of the only thing that actually make you money over time. And a lot of my members understand this, but a lot of people in the real world, for some reason, don't understand this. And funny enough, actually, if I do this for you, I'm going to show you guys something crazy really quick. The education out there is so bad in the overall world that someone like this who, he sent me his curve, his results, and you can see he has a lot of break evens, some losses, a lot of break evens, some losses, break evens, and wins here and there. And funny enough, if you add all of this up, this guy is up around 15% on his account. So this is about a 15 RR gain over the span of about 20 days. And despite this, which I know a lot of you would say this is amazing, and it is amazing, right? Because if he was with Men Funding, he would have not only been funded, but he would have already gotten 10% in payouts and profit, which is insane to think about. But the crazy part about this, because these are really good statistics. These are really good. Like, this is a very profitable system. Despite this, he's basically saying, I know losses and break-evens are good, but this feels like I have a lot in the row. Should I start changing things up? And to me, this was really crazy. You guys can pause and read my response here if you need a little bit more understanding behind this. But the reality is these are phenomenal results. And the reason this guy has emotional issues and likely isn't executing a system that would make him a lot of money is because of the shit that he's learned before. So make sure that whoever you're learning from and wherever you're learning, that you're not under this guise of, you know, I cannot take losses, I shouldn't take losses, I need to hedge all my losses, I need to average down, I need to double up, I need a martingale, I need to find the best system that's going to make me money every day. That's not how it works. Trading is a game that you play over time. The traders that make money through losing. So learn to lose properly with edge, and you're going to make a lot of money. Nonetheless, this is another great trade if you didn't take this one, but this one looks good. Again, we're just looking for a move that likely does not want to come back. So tiny pause, and there we go. Okay, easy. Just like that. This is easily a break-even trade. Just like that, okay? And again, into crazy strength, usually over at least 2RR, you can look to partial. So this is about 2RR. What I'll do is I'll let it hopefully make some more strength, right? So another beautiful strength bar. What I'll do now is very simply, right? This is about 2.89, you know, a few candles in. So actually this is fine. I take a partial out of this. So this is about 2.8. And 2.8 halved is about 1.4. So we'll take a 50% partial of 1.4. Okay, we'll do it here. So 1x trade was just canceled. 1x got 50'd at 1.4. And then the other 50, we're just going to trail now with whatever it wants to do. So again, crazy strength keeps coming in, perfectly fine. And like I promised, all we're going to be doing is we're going to be using the 20, which is this gray line now, to get out. And again, if new setups now happen because we're managed, we will take them. So if price pulls back into, let's say, the 20 or the 20 starts going sideways and then it starts moving up and makes a long, because this is how prices move, those are longs I'll be happy to take, right? Otherwise, we're just going to manage this and see what happens. So price kind of pulls back, and in this case, right, it does close below the 20. So for a lot of you, this is a close. Now that's at around 1.14RR. Usually a trend, especially a trend where you're trailing an average, I don't just close it based on this. I usually close it at least 1 to 3 or higher, 1 to 2 or higher. So in this case, I'm going to ignore this one. I'm going to let it take me out if it needs to, and I'm going to continue watching if, you know, there's going to be opportunity. So this looks like it'll take you out, does it? So again, be honest with yourself when you're trading. This is around the high, so this would not have taken me out yet. So I'm perfectly fine and inside of this. Okay, cool. Now again, we're finding ourselves on the 20 and 50. The 20 is kind of going sideways. If we can get some kind of sideways move out of this, just like that, actually this, okay, I know this trade ends up working, but again, so I already know this trade is going to work because I've already seen it. This happened today. And again, the purpose of this video right now is not to blow your and surprise you with these amazing gains. It's actually just to give you a proper foundational template for following timeframes, for following good moving trends, and then to get involved in those trends. So again, I'm not here to pretend like I'm doing some surprise crazy shit where, oh my God, look at all this money. Instead, I'm trying to give you a real template to trading, to showing up every single day, and to executing rules. So once again, you have the rules met the same way you had rules met here. Now we look down here at 2.5, we double it for about 5. So 5 puts you at around a stop down here. Okay, so I think that stop's kind of large. I'd probably put it a little bit closer, you know, like this is quite a large stop based on the actual move. But if those are your rules, that's fine, right? So I told you from around 0.5 to 3x. So again, if it's even at 2.5, that's fine. I would probably throw it behind this candle right here or a little bit below. I think this is perfectly fine. If it comes back to take me out here, I don't remember if it does, that's fine. But again, same idea as what we saw back here, right? Where we're kind of throwing it under the momentum that was existing. And again, we're just protecting ourselves based on the candle here. You could even throw it a little bit further behind to protect yourself at exactly this demand validation right here. So just beyond it, where price shouldn't come into. I think that makes a lot of sense. So we'll do that. Okay, now again, notice as I'm doing it, there's not like this perfect black and white rule to always make you money with perfect stops. Instead, it's an understanding that you use to get involved, because oftentimes if you follow good rules, you're going to make money over time. Okay, so we'll see if we get tapped into this, right? This does tap in, and again, same thing goes. If it makes crazy strength, we'll move to break even. If it makes crazy strength, we'll move to break even. If it moves up, moves down, and then moves through that, we'll move to break even. As simple as that. So crazy strength comes in. This is the pullback. If it takes out this high, we simply move to break even, is all that's happening, right? Even at this point, as it puts in this low, it shouldn't really come lower now. Yeah. We can easily just take this and move it to break even as well, right? Just like that. Okay, and the rest now, once again, we look to partial 50% into crazy strength, and the rest we trail with the 20, okay? So we look for crazy strength, I mean, this is pretty good strength. What are we up right now? About 2.3, yeah. So if we can get up to around 3 RR with strength, then we can partial. Another beautiful move higher. 2.5. So again, as we're looking at this, right, what you'll notice is the 20 and the 50, right? So some of you may be even taking this trade as an entry, which is perfectly fine. There's nothing wrong with this. This actually still does meet the rules. However, it's happening higher than that 20 and 50, or like it's happening as it's starting to slope up, which means that you need to test it and be aware that the type of trades that you're trading, where this is, you know, type A or this is type B, these are two kind of different trades. The more testing you do, the more types of entries you will be permissible or open to, right? So like this trade here is more similar to this trade here if you took it. So this one right here, if you took this trade. And then this trade here is similar to this trade here. So again, those are two different kind of trades using the exact same rules that I'm teaching you. And that's important because if you're randomly taking trades just because they look like they made a high, then of course you're gonna find yourself losing over time because you're doing a lot more random things. Now again, some of you, right, may want to take this as a long, and that's fine. But don't let FOMO kind of judge you. I think this is kind of extended. I think it's far above it. These can work, but I wouldn't really take it. I would instead use any strength that comes in as partialing. All right, so nothing to do, kind of comes down. Again, I'm looking at this 20 as management, but I'm just waiting on some strength, hopefully, if we can get some. Okay, beautiful strength, and that puts us at around 3.3, so we'll take a partial here at 3.4 for 1.7 gain, right? 1.7, and again, that's another 1x trade. The 50% came off at 1.7, and the other 50 has not been taken off yet. And once again, now we're in potential trends. And what we want to do is we want to hopefully retain these trends, and once again, here we are. We're at live price, where it's now retaining those initial trends, those initial demand points that were created are now being retained. This is that Monday. This is those same trades that a lot of the members in my Discord, the one that I actually started by showing, kind of just going through a few, that I actually personally traded. And now you simply manage this thing, right? You can have your stops moved up if you want to some of the lows here, maybe just behind this 50 if you want, just like that, to make it very simple on yourself. And the rest, you just wait for a candle to basically close under this 20. And once that happens, you can take your partial. Or some of you may want to be in moves longer. So what you might do is you might take another half off of what's existing after this line, and then the rest you'll leave at the red line. Perfectly fine as well. These are all just some small management ideas that you can use right now in your own trading to get a little bit better, to start to inch a little bit more profit out of the trends that you actually end up catching. And hopefully, with what is being taught today, to go and do this for yourself. And again, please, 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 go and test this yourself. Go see it for yourself. Go use it. Don't pay me for anything. Go and use the competitions that are completely free on the Men Funding website to actually trade some of these ideas. Start seeing how it actually looks like in a live environment, right? Get good at it. Win a free account. And once you start seeing profitability, or once you start understanding the value in potential tools like these, and you want to have access to them, and you want to use them to actually scan things and make it easier for yourself, join up with the team. And I'd love to interact and help you and work with you, because that's what I do. But this is what I'd wait for. And now simply, right, let's just assume it came like this and closed somewhere here, right? This would simply be a completion, maybe around there, for 5, which puts you at around 2.5 gain. And then this one would be at 1.99, which is 2, which is 1. So I might have not closed this one just based on where this closes. I might wait a little bit, but this is what it would look like, right? And then overall, again, in this case, you know, we had no losses specifically because it's just the beginning of the week. There's nothing really to do. But now, as a homework assignment, go ahead and follow the action into the coming week. Keep following it using this 5:35 hour. Follow what's going on, right? All we did is we traded these overall stage 1s and 2s that are delivering right now. And now, again, what would you wait for? You wait for price to hopefully pull back a little bit, right? You'd want to see price pull back to the 10, the 20, or the 50. Pull back, either start making a move again where you start to get positioned, or make a move that's longer term, stage 1, because again, these moves will build at these MAs, and then they'll start moves on the entry time frame, and then watch yourself and see what you're actually capable of, where when price fails down, if it does fail down, what that means for your system. And what you'll see is that it doesn't mean you're taking losses, it just means that you walk away. You prove patience to yourself. And if it does start making a move and the validation starts delivering and the 5 hour still looks good, which they all do right now, hopefully the validation goes into a little bit of a sideways pocket right now, then you're gonna see more opportunities made available to you. Or if this just continues randomly, which it might, those become larger profits on the running trades that you already have, right? So at this type of management, where this is simply where you would close instead of, probably a little bit higher when price starts to hopefully now make a continuation move, because this is a live price, right? The gain at the moment stands at around what? 1, 2, 3.1, 5.6, 6.6, around 6.6 R. So the gain on the current day, which by the way does not mean that this is just how you're making money every single day, because that's not how markets work, is around 6.6 R, which means at an R risk of 1%, you've made plus 6.6%. At a 1R risk of 0.5%, you've made 3.3%. At a R risk of 2%, based on the type of person you are and the type of trading you do, you just gain 13.2% on your account. And then again, you can take this a step further and look at the math on it if you had a 50K account, a 100K account, a 200K account, a 400K account, a 1 million account, a 2 million account. Or if you're crazy and special and you're the best person in the world, as a lot of our traders are, maybe you scale yourself to 5 mil with Ment Funding or whatever other place there is, right? Because again, you don't have to be with Ment Funding or any other firm. But these are the rules that I would personally use if I was kind of starting out. Well, this actually are the rules that I use, and I was trying to get better understanding how to get position and trends. Use the tools to screen, use those screened markets to start watching them, follow an EVC that's clear to you, and overall puts a good compact look at the actual action, follow a few simple setups, get involved when the market's good, and then manage your trades accordingly. Take your losses as you need to, and do this over and over and over and over again, right? Because again, at this point, we're at a place where I could take 6 more trades now and still be at a gain if I lost them all. That's very important to see and experience, because it helps you understand that if you had taken other trades, if you had taken losses of any sort, if you had taken, let's say, this trade for whatever reason, it wouldn't really affect your gains, right? Because now you're following good rules. And then if we took the trade that we spoke about at the beginning, which was this guy right here, well, you'd be up an exuberant amount, right? You'd be up even more. And that was something that, I personally just didn't take because it didn't meet the rules for specifically the video I'm making right now. But the beauty of trading, and hopefully a lot of you are seeing this right now, is that my rules are not yours. I want you to use the concepts to get really good at this, and then I want you to use the tools to get exceptional at finding good markets, right? At following things, at finding markets that are worth trading for you. And then I want you to literally go and execute your systems, make money. Break even manage your trades to break even and take losses so you can take your wins. Now again, this is not financial advice of any sort, no shit, but use it. I hope this helps you guys. And this is how I trade gold today. And that's how my members did too. I'll see you on the inside. Thanks guys, bye.